Good morning, everybody. Welcome to the Flow Show, BOE Day, and lots going on already. Two central banks already passed under the bridge this morning. We'll have to talk about those as we get to them. Morning, Kay. How you doing, mate?
Hey, Ryan. Hello, everybody. Yep, doing fine. Thank you. 2 down, 1 to go for today. We're ready.
Yeah, and then it's football time. I think there's going to be a few people exiting markets early today. England are kicking off at 4 o'clock. I certainly won't be around. So, yeah, get it in now. Get the Bank of England out of the way and then look towards the football again. Right, let's kick off and we'll head over to China as usual. They left their 1 year and 5 year LPR rates unchanged overnight as expected. They did, however, slightly fix a bit higher. We're starting to look at that after the comments yesterday from PBOC and officials over what they're going to do with the currency, maybe potentially allowing it to weaken. They set the midpoint at 7.1192. It's still within the 711s, and it's been ranging 711s, 710s for weeks, but that's the highest for quite some time. So we'll keep an eye on that one. If it starts moving up, 712, 713s, that's going to be further evidence that they're letting things go. It seems the market's taking those comments to heart anyway, because we've seen a bit of a break in dollar China, as you can see there, pointing out the 728 level yesterday, and not going gangbusters, but we're looking to be breaking above that area now. I'm just glad I got out my shorts yesterday, and I've run into a little bit. I bought a bit this morning, 728.30s, just because I had some orders in overnight. 727.50s, 00. They didn't get filled, and I feel like I need to have a bit on. Going the right way at the moment, Kay. So, but yeah, I'm not expecting rockets. Are you?
To the moon, Ryan. To the moon. This is the new roaring kitty trade. I'm a bit long as well, as you know, from the 726s. I just bought because, yeah, I had a bit of a sneaky feeling this may sooner or later happen. But yeah, no, it's gonna go. It'll be a slow grind, I guess. They're not going to let this thing go straight away back to those 737s or whatever that we saw before. It's not gonna go at a speed. But you know, the good thing right now with this is at least we are not paying any funding away.
Yeah.
Chinese yields are a little lower than the US, so we can concentrate on what they really do without having to worry too much about paying away money every day. So that's a decent trade. I think it's a decent trade, but it's one that we will have to be in for a bit longer. Be patient with this one. See how it goes. If we can get back above 730 for a starter. And then, yeah, I mean, handle it from there. Could be a very, very slow one to go.
Yeah, I would be interested if we do get a dip, maybe, you know, something on the dollar side, data or whatever, you know, anywhere down towards 725, 726s. I think I'll just stick on a little bits and pieces if we dip down there again, and as long as the rhetoric hasn't changed.
The thing is, there's not too much of an alternative I can see for dollar China. So
yeah,
if we would get like weak dollar numbers, it may put the trade, let's say, in danger, or we will need to reflect on that. I'm a bit, I don't know. I've got tough one to find the currency to put against it, because sterling, we don't know what the BOE is going to. Okay, it may be a case to reflect on a bit later. Perhaps sterling is one that we could keep against it, but we will have to see data and the Bank of England for their antipodians. Maybe do trade the divergence trade between Kiwi or Aussie and China if everything would go pear-shaped with the dollar. That is still something we may need to reflect on.
Yeah, very much so. Very much so. I'm going to stick to, like you say, stick to dollar China at the moment. It's the main one. It's probably got most liquidity in it as well, and yeah, I'm not sure how many people will have access to some of the other ones. Not a lot of brokers do one as it is. So anyway, it's going the right way for now. It's nice when we get those signals from officials over there. As I've said time and time again, if they can be pretty clear and it can be pretty decisive for the move of a currency. So for now, it's working smalls. So we'll see what happens. Over in Japan, they sold 1.745 trillion yen of 5-year bonds. Again, another good coverage. The bid to cover was 3.971 versus 3.897. So another good take up over there. Things are going fine and dandy. We've heard from one of the big whales, Japan Post Bank, said they will expand investment mainly for JGBs with a 7 to 10 years range of maturity. Their PR bod said that we have already begun shifting investment towards government bonds from deposits in light of the shifting trend in Japan's interest rates. We plan to keep expanding investment mainly into long-term Japanese government bonds or notes with 7 to 10 years maturity, taking into account the size of the BOJ's future bond buying taper and the market fallout, they said. And on the separate front, the BOJ have part of their review into the effects of ending NERP and raising rates. They warned of the potential hit to lenders from rising rates. Obviously, the market's been very depressed over there in terms of interest rates. So there are a lot of people who've borrowed money at low interest rates. Some companies with low profits, they will potentially take a hit if rates go up. And if they get into a bit of trouble, it's obviously going to reflect onto banks' books, all part and parcel of raising rates in a country that hasn't seen such for quite a long time. So the BOE are making sure everyone knows about that. And we've also had our mate Kanda out, now that dollar yen's sailing above 158 quite strongly, saying that they will thoroughly respond to excessive forex moves and there is no limit for forex intervention resources. For all of that, a big we've sort of been expecting this news from some of the whales that they're going to start stepping in. Bit of surprise. Well, I wouldn't say surprise, but they're talking about going to longer maturities when we've just heard the BOJ saying that they're going to, or the government saying that they're going to look to issue shorter maturities.
Yeah, I think, and then there's that article, as you mentioned, about some financial companies already crying in case the rates would go higher. It really looks, apart from those whales who have been on the line, they said, like, if on the same line, they said, like, if JGB yields rise, we are going to get back into them. So I think that's preparing perhaps some of those meetings that the Bank of Japan and market participants will have, which will likely be government maybe, Bank of Japan, MOF will be there, and then all the whales, the Japanese mega banks, the trust banks, the insurance, likely. So the whales is the first. This is the passive one, the post bank, as opposed to GPIF. They used to be close together, but then they split them into 2 or even 3 entities. A good while back, a long while back. But yeah, they seem to be okay to fill in some of the void that the Bank of Japan would leave in when they will start to taper their JGB buying. The government is a bit of a strange one, because it does seem, even though that they should have known for a year and a half already when Ueda came in, that they should have hurried up to finance for longer. Now they are going to go on the shorter. Okay, they will probably know that the Bank of Japan is not going to go too far, so it may be the case that indeed it's going to be cheaper, of course, to fund on the shorter end, but it's not. It's not testifying of too much of a forward-looking plans that they have. So. It is Japan, as I said in the room again this morning. It's hard to compare it with any other country. But yeah, it does seem that some are still taken by surprise about what's happening over there. So And I guess the market is also a bit reacting to that, sending the yen a tad lower. All of this, this whole melting pot now, and we will have to wait for the results of those meetings and then into the Bank of Japan meeting. Is not really testifying of there going to be major changes in volumes or in how shall I say, the one looks like be compensating the other one, okay?
Yeah,
If the Bank of Japan shortens the maturities and then the government shortens the maturities, there's going to be like a bit of a balancing act. And if the Bank of Japan tapers in the long term and the whales are okay to step in, that's going to balance itself as well. And
yeah,
that is what we are seeing now, I think, in the JGB market, is first of all, the market doesn't know really what to expect yet. We don't know. And on the other hand, JGB yields are not rising because it starts to filter through that those whales may come in and fill the void, that the Bank of Japan is going to leave. So
maybe a bit of front running coming in.
come again?
Maybe a bit of front running coming in on that basis.
Yeah, and the market's saying like, well, if the whales fill in the void, those yields are not going to run very far.
Yeah, yeah. I think that the sum of it all, the BOJ warning and all the talk, I think it just goes to emphasise that this is going to be a slow process. I think it maybe even rules out the possibility of 25 pip hikes if they look to hike again and they keep it fairly small, because if they're writing reports about the risks to lenders, they're not going to suddenly crunch them with a big hike and
Voilà.
put the pressure on. So we've been saying it all along. It's going to be slow and steady, and
Exactly.
these sort of lines play into that, I think.
Exactly. I think that puts us in the expectation camp of 10 to 15 BPs rather than a 25,
Yeah,
right? Especially if we can believe the not insiders, but the ex Bank of Japan people, the people very close to what's happening on the Japanese monetary front. Most of them expect rates not to go above or at least not far above the 0.5% mark. And yeah, then I think some people who were expecting the yen to strengthen for a longer period, maybe in for a bit of a disappointment again.
Yeah, exactly. And that obviously then brings in the intervention risk, because if they only go by 10, 15 pips, the market might take that as a bit disappointing, and we see yen pairs shooting up again, and then out comes Kanda with his green hammer hitting the top again and buying it at the bottom. So if you're trading the yen, you've got to understand, this central bank tightening doesn't mean the yen's going to strengthen materially. We had a lot of the moves on the expectation last year or early this year, and we've already undone all of that. So we're higher than when they hiked. So that needs to be your expectation.
Yeah, and let's not forget that the biggest move in yen that we saw was on the back of US inflation starting to come down, and they were the kickoff of the game was of course interventions, but the big move down from 146 down to 128 was US inflation, and if and afterwards it started to take the other way around again, and since US inflation and since US data are a bit stubborn, not falling out of bed, even though showing signs of topping out, even weakening in some areas, it will need the rest of the world to fall apart for the yen to strengthen for longer, and we've had and I've been banging on about that, and we've had the experience of it again, right? So, and this is what we've been talking about. If it's too slow in Japan, you have to look at the rest, or it's not going to be viable for very long to be long yen. So, and it's again showing, and because and last word from me on that one, because we are not going to spend the whole thing on Japan, but again, and I've been stressing it in the room again, Japan is nowhere to compare with any other country.
Yeah,
It's worked differently over there. Traditionally, a different approach, different sensitivity between one and the other parties, and it works differently over there. So you need a catalyzer which is most of the time external to Japan to really get the yen on the move in a way.
Yeah, it's a whole mindset and mentality that they're trying to change here, as we've said previously. And yeah, slow and steady, it's going to be. Right, let's move on then over to Italy and France. Sorry, over to Europe, and France and Italy have been had their wrists slapped by the EU over finances. Italy's been hit with a excessive deficit procedure. Long and short means that their finances are a mess. Sort it out quickly, or you'll get a strongly worded letter coming your way, because they don't tend to do anything other than warn them without any real action. But Italy finance bods have been running around saying, yeah, we're trying to fix it with our budgets coming up and whatnot. But yeah, not going well for those guys. And we've had a little bit of data out this morning from Germany, inflation data from PPI, which came in softer than expected year on year and flat on the month. So still disinflationary pressures being seen over there. Although the sun must be out in Germany today, must have been their win last night, because the IFO have raised their German 2024 GDP forecast to a whopping 0.4% from 0.2% previously. And just quickly, I should mention the football, because this tournament is in Germany. We should expect to see a lift up in the economic data covering the period of the monthly period of these of this tournament, because obviously there's been a big, huge tourist influx into Germany, and that tends to have an economic impact. So we probably see some decent numbers for Q2 coming in. Beer sales, exactly, Gavin. Although I was watching the Scotland game last night, and the Swiss, when they thought they'd taken the lead, all you saw from the crowd was all the beers going up in the air, and then it got ruled out by VAR. So that was a waste of beer. They would have been straight out the bar to top up again. But yeah, so expect the economic effect from the tournament to play out in the Q2 data, and it'll probably fall off a cliff again. Right, over to the cheese eaters. The S&B cut their rate by 25 pips to 1.25%. A half surprise cut. The majority expected an unchanged, but the chances weren't zero going in, but they decided to pull the trigger. They said they kept their message on their willingness to act on FX as unchanged. So no pulling it out or changing it about at all. They did pay lip service to the recent rise in inflation, but they still cut their inflation forecasts between now and the longer term. So they still see the path of inflation lower. The basketball player Jordan says, we do not give any forward guidance regarding interest rates. We will adjust the policy rate to ensure inflation rate stays in a range of price stability. We will go forward looking at inflationary pressures. The neutral interest rate is probably at zero or a little above zero, and FX intervention can be in both directions. He also mentioned that the recent franc strength was due to political uncertainties, waving fingers at people across in France, no doubt. Overall, not real big news from the meeting. They're going to keep things going as possible. No change to FX. Kay, your thoughts about it?
Well, in short, I think the whole thing was about, you can sell Swiss franc, but not too fast. He said the zero or the lower bound rate was probably around zero or slightly above. So they assume that rates will stay at 1.25% for a while when you look at the statement. I think they, noting that the Swiss franc strengthened due to political reasons, may hint, combined with the we can be both ends of the intervention side, that they may, maybe not in big amounts, but they may try to just not to let it strengthen too much anymore. because then it would put their corporates in danger as well. We have seen the trade numbers this morning was a positive trade balance, but the activity indicators were lower. Both in imports and exports were down. So I think it's a bit of a balancing act, but I do think that the meeting was relatively dovish because well, I mean, in combination with what he said, we have to note that they effectively cut. So that is a signal, right, in itself. So I think that's about what we take away from it. I think most in the room have had the similar kind of feeling that Swiss should not strengthen too much unless we get like another big round of risk off somewhere.
Yeah, I think there's definitely no shutting of doors on further cuts or FX or anything like that. But I think maybe some were expecting a bit more of a pause message, perhaps. But you know what Jordan's like; he doesn't like to give what the market was looking for at the best of times. So yeah, one more for him in September. We'll see. They've got 3 months of data to watch until then. Sometimes it's nice not to have rate decisions every month, every other month. Maybe some of these others could go to quarterly and save us all the jaw boning in between. But then we'll probably get even more bored than we are now. So yeah, that's it. Jordan's done and dusted. We'll get to see, as Kay said, whether these moves, the strengthening of the Swissy is going to reverse, or you know, there is a lot of the EU politics in this as well, and elsewhere, risk and whatever. We know that's not finished by any way, shape, or form. So we probably may not get a resolution on that or start to get clarity on that until we get the first round of French elections at the end of the month, and then we'll see what mess is going to be created over there. Right, moving on. Norges, they also kept their rate unchanged at 4.5% as expected. They see the policy rate staying there for some time ahead, likely at least to the end of the year. They say they see the tight policy starts for somewhat longer. Governor Bakke, or Back, how you want to pronounce it, said that the rate path indicates total cuts of 0.75 percentage points or 25 basis points, 75 basis points in 2025. So that's when they expect to start cutting, and by about 3 cuts over there. Not much more to say about that one, Kay. Norges?
No, I think 2 words: firm hold, and
see you next month.
yeah, mostly. I found them the Norges Bank of late being extremely steady. It's of course they are data dependent like all of them, and that comes back in every statement. But they're very quite a steady hand of late. So they are. If you want to trade anything of the Norwegian kroner, I think you look at oil and but they are quite firm. So I think that firm tone compensates enough of their daily small Norwegian kroner sales. So yeah, I think no, firm and steady, and see you next month.
Yeah, see you next month. Right, bit of US data out yesterday, just a couple of little private surveys, housing related. Obviously, the weekly MBA came out, a positive number there. Probably more the news is that we're seeing that rate now dropping below 7%, the effective 30-year rate, factoring in the market thinking, the Fed ruling out the possibility of hikes. So that's allowed conditions to ease up a bit with that rate coming down. The NHAB housing market index was a little bit crappy, coming in at 43 versus 45 prior. Had been on a little bit of a run high, a bit of an improvement, but now it's just starting to go backwards again. So again, another one of those little yellow flags being waved in the housing market. I think we get some more housing data today, if I'm not mistaken. Yeah, there we go. We get what do we get? Housing. Oh, we've got some Philly Fed out today as well, so we'll keep an eye on that as well. We've heard from Mexico's new president to be Sheinbaum, as we're going to call her. says the goal of the next government is to reduce the fiscal deficit to a maximum of 3.5% of GDP by 2025. So talking nicely about finances there. Apparently he's ruling out fiscal reform and says we'll seek resources from government digitisation in tax and customs systems. Sounds like an IT job for me. Kay, didn't sound like any strong rhetoric out of that market's been a bit fearful of, but no real move in the MEX at the moment.
Because no, the market is still reluctant to buy the messages right now until they really formulate what kind of decisions they want to push through. And I guess we are a little bit of a holding pattern right now in for what the market is concerned. I don't think there's too much of a message for us in there. Digitalization, no big fiscal reforms, but the questions remain whether they will make some investor unfriendly decisions, like trying to push stuff back to Pemex and things, and that's going to be the next questions, for the market. And until we know more about those, we could be in a bit of a holding pattern. It's actually interesting to note that the MEX is not regaining much despite its 11% currency status still. So that really does mean that the market is on its toes regarding the Mexican peso still. We don't hear you.
Hello, mate. Sorry, yeah. I think this again shows that maybe this move was a bit of a shakeout of the short termers. If you're still if you're short from from 2022s all the way up here, you're not going to be overly worried about this move just yet until you start breaking up again. But we're not making a firm decision around this 1850 level, holding below it again. So this is still really the key level. I think maybe if we get another move above there and we start holding it, then we're probably going to move up higher. But for now, that still remains the key pivot point for me anyway. Over to the Bank of Canada, the old syrup swiggers. We've had their minutes out, and the gist of it was that members agreed it reasonable to expect more cuts if progress continues, although any further easing is likely to be gradual. They said that, they agreed that the policy is not close to the limit of divergence from the Fed. This is something they spoke about. If they're changing policy while the Fed are staying on hold, they're happy with the divergence, but it does have limits. So they're not close to that limit yet, which gives them leeway to cut more. They discussed the risk that inflation progress may stall, as it has in the US, and that rate cuts may fuel the housing market. It was said, though, that some members considered waiting until July to cut interest rates, but that 4 months of the core CPI falling warranted the June rate cut. So that's that from the Bank of Canada. UK politics, there's been a couple of polls out again showing Labour likely to take a big majority. One poll, though, said that it would looked like it would take fewer seats than it did when it last came into power, had power in 1997 and 2001. That's likely due to the emergence of the Reform Party putting pressure on the Conservatives and getting a bit of a protest vote. But polls still echoing what we've heard, that the Labour Party are likely to get a sweeping win. Any other headlines you've got, Kay?
I think we did the rounds today, Ryan. I think we can look forward to our dearest friend, Mr. Bailey.
Oh yes, let's talk about him, shall we? Do we have to? Right, so let's get into it. The Bank of England. Now, given that the inflation data and everything we know so far, the market particularly, and most of us expecting little in terms of policy change here. There's almost zero expectations for a rate cut. I still think just because they're stupid, that the risk of them cutting is still higher than zero, but likely that we don't get a cut today. I still think it is likely that we get a good signal of when the next rate cut will come, and that could be a push to August. And I think so that's the next two meetings, August and September. August will be the next forecast meeting, so that's when we get a press conference and Bailey talking and whatever. There's no press conference with this one, so it's just going to be the statement and the minutes. The votes are going to be our earliest clue as to what's going on. 7-2 last time to keep rates unchanged, to voting for cuts. I think you can judge this in two ways. If it goes 6-3, that likely indicates a September cut or a cut further than August, because that gives them some wiggle room in August to make the vote 5-4, which basically puts it on a knife edge. If it goes 5-4 today, then I think that puts August on the table, and they will get one more CPI report and will be past the election. Now, I know a lot of people talk about central banks. They don't want to change policy during an election. That is hogwash. If central banks need to move, they will move. It's a bit of a damned if they do, damned if they don't. Take the US. You know, if the Fed cut rates, they'll seem to be playing on one side. If they don't cut rates, they seem to be playing on the other side. So they can't win either way. It's a zero-sum game. The same thing over here. They will act on policy as they see fit. So that's another reason not to rule out a cut today, because the politics doesn't come into it. What I am keen to learn is whether we get any comments. Usually when we get a BOE, when there's no press conference, Bailey pops out on the press, TV, radio, whatever, you know, some hours afterwards, and he goes over what's gone on. I don't know if we're going to get that, because they're all on effective blackout from speeches while the election is on. But as this is monetary policy, and they'll be issuing statement and minutes and whatnot, I don't know if we might get comments later on just speaking on the subject of today. So that's a little bit of a risk later on. Again, it could add or subtract from when the rate cut is going to happen. But overall, as I say, I think we need to pay attention to the votes. That's going to be the key factor today over what they might indicate moving forward. Long story short, for the quid, if it goes unchanged on rates and a 7-2, I think that's probably the more bullish outcome for the pound. Again, though, I'm not expecting rockets. Everyone knows the BOE wants to cut. Everyone knows they will cut. We're just trading the calendar again. So it's not like they're not going to cut at all, a bit like the Fed. So, yeah, I think it's probably going to be a bit neutral, but those votes will determine whether the market buys or sells the quid, and to what degree. Any thoughts from UK?
Well, first of all, I think he won't be able to hold back to speak to one or the other radio station, because that's his nature. So I suppose we will hear from him after the meeting. Yeah, the rest is the balance of the votes. I think the 5-4 is much closer than what those expectations show. I think we are heading for August. And yeah, I mean, it's not because there are elections that they won't cut. And as we've been saying for already a while, they are dying for good reasons to be able to cut. So I think we're close. I would still say that the balance for today is probably leaning towards a hold, but it may sound or look like a bit of a dovish hold. That's my base kind of case. So a 7-2 for me would be rather the surprise trade.
Yeah, very much so. Very much so. I think you're spot on with that. And as we said, 6-3 probably pushes everyone to September. 5-4 pushes everyone to August. And that's the way you got to look at it and judge the quid accordingly. So let's take a look at the old pound note. Her Majesty's, or His Majesty's quid. Oh, old habits die hard. And his notes are coming out with his face on it. King Charles. Euro sterling, look at that, not doing anything as usual. So sitting bang in the middle here. Really, the risk for me is that there's more chance of seeing the pound selling than there is in it being bought up. But I'm not expecting anything huge here. If the market gets disappointed with a 7-2 hold, maybe we go down and test 84. I don't think there's going to be anything in that would see us, smashing through the level down to 83.50 or something. So I would, at the worst case, expect to see a test of this zone down here. I'm still long a bit. So I might, if we get a test and hold down here, I might add to that. But I'm long at right in the middle here, 84.50s. On the other side, if they do indicate August cut, that might be a little bit more than what the market's expecting, because a lot of the markets pushed it further out down the year. We probably get a move up towards the 85 area, and this at least the bottom of this zone here. And I'll look to take a bit off my trade if we get that. Other than that, I think we're probably going to sit in range, and the same can be said for cable, I think, as well. Still knocking around this 127 area, but you can forget that going into the BOE as a level. Probably safest way to play it is big figure, half a figure either side. So 127.50, 126.50, maybe down to 126, maybe up to 128. If I see any of those sorts of levels, I'll just look to play the range trade and maybe a little bit of the counter. You got any other quids under your radar, Kay?
No, I don't have
Polish.
Polish zloty against the pound. Yeah, maybe. As I said last week already, the positiveness of the sterling seems to wane a little bit, and I may try to sell a rallying cable, perhaps. I'm not going to catch a knife on the euro Swiss on the euro sterling, because I don't really like the euro still. But it's not that I'm going to sell euro sterling, but I just don't like euros. No, perhaps sell a rallying cable. Perhaps have a look at one of those antipodians, Aussie sterling, sterling Aussie, or sterling Kiwi or so. But I have no big plans to trade this BOA, to be honest.
Okay. Yeah, I think it's. I'm in a little bit because I felt like having some, but I think it's just going to be a reactionary trade. It's just if you hit any levels, any ranges, that's going to be my main play. I'm not looking to do anything more going into it. So pick your poison if you're looking to trade it. Get in your charts, pick the pair you want to trade, plot your levels, think where you'd like to trade. Try not to get chopped up in the middle. Certainly don't take a punt on it and guess what they're going to do. Just react afterwards. We've come through so many central banks, so much data, and we're still within ranges, and that's the way you got to think about trading this for the moment. Right, one other thing that's on the move today is dollar rand. This bit of a group trade going on in the chat room. Our mate James wondering what's gone wrong if we're all trading the same way on this 1K.
Hey, I said yesterday, usually when we do group trades, when our community is in agreement, it usually isn't too bad. And look, we were trading below 18. I said it's starting to look a bit cold here, slow stop run, it seems, and sooner or later the positivity may be waning. I think we're about there, and I think this is encouraging. Move below 18. Now a relatively sharpish move back higher. We're about 1% higher, but it's an emerging market currency, so we have to reckon with some kind of moves like this. I think it's relatively encouraging. I would be worried now if we get a move back below 18 and starting to cap there. Then I'm really going to reassess my position. And as usual, as we do when it goes up, we start to slice a little bit. We start to solidify the position in bits and pieces, and that's the way we are trading it. That's the way we like to trade it, and you build a sort of a bit of a safety net in it, even when it goes your way. We just don't let things run and then hope for the best. But yeah, I think it's encouraging right now.
Yeah, exactly. I was slicing at 17.14s on my 18.14s. I've got 17 on the brain today, I tell you. 18.14s.
Yeah.
And I think, yeah, if I see us up at this 20s area, I'll be slicing a bit more and then maybe thinking about putting the stop up if we get over that. But yeah, we all jumped on this one. We're all doing a bit of slicing. You say put it in the bank while it's there and see what the rest wants to do. Right, it's on the clock, Kate. I'm going to bounce it over to you, mate.
Well, yeah, I'm not going to show too much because it's that already the time of the day. Perhaps just show a couple of those metals. Look where we are. Good bounce in both gold and silver. I think this is a pretty nice channel here that we formed on silver, and we are around an interesting zone here, 30 and a half. I did take out a few of my lines and I should have left them. 30 and a half is a bit of a level as we know. Went to test it, capped it for now, but it's silver. It can move a lot. If this breaks, then I think it's going to be positive. And I would not be surprised, because as we saw, okay, in FX, pure FX, the dollar is still doing okay versus stuff like the sterling, the euro, yen, for instance. But in other instruments, just like the metals and the S&P, the indices, for instance, it's showing a bit of a different picture. I think this is the kind of market that we are in. So encouraging if you would get above 30 and a half for a little run up. I could not get mine low enough. The add-ons, I do have a little bit more. People in the room will know for mid 29s. I think if I see 31 and a half, I'm going to start to slice a little bit. But this is either capped now and we are going for another leg lower, or if we get through it, and we do have a bit of data this afternoon. So if you get through it, I think the run up to 31 and a half could be a pretty solid and rapid one. Gold still mooching around in this broader zone. Also encouraging the move up. We're back trading above this twin. Well, we tried at least to go above there. We're actually back below. So yeah, 23, 45, 50. That's going to be your zone. I think it's relatively neutral, but encouraging that we held there below 23 and starting to move higher again in the global picture. But if you look at it, we are still in broad ranges in this big rectangle here for the time being. But it won't need much of a weak-ish data out of the US with yields under a little bit of pressure to send it through, in my opinion. And then, of course, look at our friend the S&P. Reminder that I think tomorrow, big expiry day. We have moves like have seen moves like that in the past, where you do a top or a bottom right into the OPEX. It does seem like we may run for the heights in come tomorrow. So keep an eye on this one. I think if there may be an acceleration. Some people have levels around 55, 60 here as well. May see that, it is just too strong to stand against it. Even if we went back below 55, I don't think it would mean that much. I think we need to now already get back below 54 and a half, 54, 60, 54 and a half to start turning this thing around. And of course, keep an eye on the clock tomorrow on those OPEX, those expiries, because it could be a wild ride tomorrow. Okay, but I do think that the way this looks, we may see a bit of a blow off into tomorrow, and then we will see what happens next week again. And with that, Ryan, back over to you, mate.
Thank you very much, mate. Yeah, that S&P move put me out my short attempt at 55. Little play on the big figure there, so I'm out of that this morning. And it's the sky's the limit again for that one. Right, everybody, thank you for coming to the Flow Show. Do trade safe over at the Bank of England. Keep an eye on those votes. And have a great day. And we shall catch you all up, hopefully, with England with a good result. Or I might be grumpy tomorrow. So have a good one, everyone.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.